All right, welcome back, everyone. Today we are talking about capital gain distributions, right? And how do we control the tax liability in our taxable investment accounts, all right? For a lot of you, you've done a great job of saving, right? You've saved a lot over the years. Those returns have compounded, right? But now we find ourselves in the scenario of, well, 62, 65, right? I got these unrealized capital gains from these investments I've held for decades, right? But I also am taking on a little too much risk right now, right? I'm getting ready to turn on my income stream. I can't afford all the volatility of the market. How can I best control the risk in the profile while being mindful of taxes? Well, one of the things we can look at when we talk about our total income picture is, if we find ourselves in a scenario where we're 62, 63, 65 in that arena, haven't started Social Security, don't have any other income, right? We can realize $125,000 in long-term capital gains. So let's say we have one of those investments that we bought for $100,000 a decade ago, right? And it's done its job, it's grown, it's doubled, it's up to $200,000. Well, now I can go ahead, I can sell that investment for $200,000. I'd realize about $100,000 of capital gains, right? Now, let's say also, I've got that IRA money that I'm trying to be strategic with over time. We still got all this space, right, that we can realize distributions from. So let's say we realize another 25, 27,000, somewhere in that ballpark, right? And we'll see then that our effective rate is still 0% on those funds. So let's say, we take our income from here, right? We've done the 200,000. We'll take 80,000 from there, reinvest 120,000 into something that's a little bit more stable, like a principal protected investment. And we're going to do a Roth conversion of $27,000 as well in preparation for the future so that we can keep our tax rate low, right? By the time Social Security kicks in and by the time we need to start taking more from our IRAs. So these are some of the things that we can do today, right, to help reduce risk in the portfolio, to solidify the returns, right, to minimize our taxes not only now, but in the future as well, right? And these are some of the strategies that we can employ more directly. So if you're interested in learning more on how I can help you with your personal situation, feel free to reach out. I'd love to review it with you, see what we can do to help you out.